According to Warren Buffett, inflation swindles almost everybody. These inflationary circumstances can have a heavy toll on your wallet, especially when you're not investing your money the right way. Now, if you're one of those people who keep their money under their mattresses all year and don't think about putting your money to work, then this devil named inflation can have its spear drawn right at your neck. In this video, we're going to reveal the best investing opportunities during this inflation period so that these investments always have your back during this time of uncertainty. Now, we're going to put forward the worst and the best investment options for an inflationary economy, and these investments are going to be divided into 3 groups so that you can understand them easily. Remember that the best investment comes with working on yourself and improving your skills every day, so make sure you don't miss out on this. Welcome to 5-Star Finance, the place where we teach you how to achieve financial freedom. Now, we're all aware of the fact that some investments are capable of making a life-changing profit. And at the same time, some investments are capable of playing the other way around. It is the understanding of these stocks and the underlying business models that need to be given attention. So here's a pyramid of 3 investing categories that you need to look at before making any decisions. Starting from the bottom of the pyramid, the worst out of the 5 places to put your money in during these inflationary times is obviously under your mattress. Or to be more particular, assets denoted in a currency. In these times, the worst assets you can get under your belt are those of currency that are being inflated, because the logic is quite straightforward. The money which you're hiding in your bank account or under your mattress is going to get eaten anyway. So by every passing day, if you're expecting some serious inflation in the dollar, you don't want to be holding it in your portfolio. It is like one of those old-maid games if you've ever played one. No one wants to sit on the losing card. Simple as that. Similarly, bonds issued by governments or by certain corporations in this inflated currency can be at risk too. Now, for example, if we lend you $100 and we say that you're going to get a straight up $10 per year for that, it may not sound like such a bad deal. After all, it's a 10% annual return rate that you're getting your hands on. But what if there's 10% inflation in the dollar? We all know that this scenario is not impossible, by the way, because that happened in the 70s and 80s. Then truth be told, you're not going to make any return on the deal at all. Similarly, let's just imagine that the US Treasury becomes so generous that it decides to drop a financial package of $1 million on every household. Now, everyone's going to feel good about this except the people who invested in things denominated in dollars. Moving up the pyramid, we have non-productive or unproductive assets. Now, this category is going to include assets such as gold, a house you are not renting, or some piece of art you have at your disposal. Truth be told, these assets are not useless to own, especially during times of inflation. As everything else, they should keep their real value. But the main factor which you did not find this category higher up the pyramid is the reason that these assets won't increase your purchasing power either, which is why they don't end up higher on the list. According to Warren Buffett, if you own all the gold in the world and put it in a cube, however large it may be, and then you climb to the top of this cube using a ladder and you say, "I'm at the top of the world," or "I'm the king of the world," now you know you can fondle it, you can polish it, and you can stare at it all day, but you know that this gold is doing nothing. This gold isn't providing you with anything that is going to help you in the long run. And similarly, 10 years from now, that rare painting is still going to be one rare painting. It's never going to multiply, which the investments appearing higher up the pyramid are capable of doing. No doubt that unproductive assets are great in maintaining their real value, but what we want over here is for our assets to increase in value. That brings us to the 3rd category in the pyramid, and that is productive assets. Putting first things first, productive assets are assets that produce valuable services or products. We all know that Warren Buffett loves to invest in stocks and businesses, but all businesses are not created equal, and that is what you should know about. The first type of business that you should stay away from is the businesses that require a ton of individual investments just to stay afloat. We all know that not all businesses are going to come out from these times of inflation equally, because their earnings may go up significantly over time, but they're compelled to put more and more dollars into their businesses just to stay in the same place in the long run. We all know that the worst kind of business is the one in which they make you put more money and they don't even offer you greater returns at all. So let us look at an example that will help us understand the concept in depth. Let's say Tom's business is selling chewing gums in a school. So each year he places an order of chewing gums worth $1,000 from Alibaba so that he can sell them in the ensuing 12 months. After selling chewing gums, he had a total of $1,100 in his pocket. He made profits worth $100 after a year. Now Tom wants to buy some more chewing gums so that he can make more profit in the next year. But he sees something that goes against his plans because there's 10% inflation each year. He made the same profit in the next year, that of $1,100, but when he goes back to Alibaba to buy some more chewing gums, he finds out that the prices of the chewing gums have increased. Gums are now 10% more expensive than last year, which also means that the gums will be available at $1,100 rather than the previous price of $1,000. Tom must invest his full amount just to restore his inventory in the next year. It is important to note that if this continues, Tom will never be able to make some of the profits in his business. Similarly, there are going to be businesses owning a lot of their assets in the currency as mentioned before, and all of these businesses are going to be exposed to inflation and its side effects. There is another type of business, let's call them productive assets. Let's just say Tom's high school classmate, John, produces a song and publishes it on Spotify. He had to spend some $1,000 on renting the studio and getting himself a DJ. Now he is receiving $100 from Spotify as a royalty. In other words, when there is no inflation, he is earning $100 as profit. Now the interesting thing to be noted is what will happen if there is 10% inflation. John won't have to put some extra capital to keep his profits steady. He will continue to receive his profits as well as inflation will play in his favour as he will be getting $121 the next year. It's the money that he can take with him or reinvest in creating more songs and adding to his library which will compound his profits. You see, this is the power of productive assets. They live up to their value. So make sure you're looking for low capital requirements and high returns on investments. Businesses with strong brands such as Coke or See's Candy belong here. You should always look for stocks or businesses with good models underneath so that you can get those big returns even during those inflationary periods. So the most important part of your journey to financial freedom is understanding these stock categories in depth so that you can make better decisions. Whether they are non-productive assets or productive assets, it's the understanding and better decision making that is going to yield great dividends for everyone in the long run. That is the reason we've provided you guys with a free ebook in the description below which will explain the 6 stock categories. Check out the video we handpicked for you and we'll see you in the next one.